at 4.90 points. All right, take a look at some crude oil. Crude oil is up about just 0.45 to about $40.37 a barrel. Gold climbed back up overnight. It raced the hit it took once it reached 2,000. And it climbed back up to $1,995.90. All right, to wind up at $29 and jump of 29.10 points. All right. Silver jumped up again. It got back over $24 to wind up at $24.24 an ounce. The euro to the U.S. dollar is up about a little bit under 1%. All right. 10-year bond is unchanged at 0.5410. All right. Go ahead and switch over to some cryptos. The Bitcoin is up about 9.22 points. The CMC Crypto 200 is unchanged at zero change. It's still at 156.75. The FTSE 100 is up about fluctuating just above 18 points now. And the Nikkei 225 is down negative 629.23. Alright, so let's go ahead and get started, family. Alright, this first article from Zero Hedge. Oil prices plummet. West Texas indicator accelerates below $40 as demand fear rises. Alright. On top of the federal described extraordinary uncertain economic outlook, the morning GDP data spooked oil prices lower at, it appears, $40 stops have been busted. Alright. While fears of U.S. resurgence of COVID have moderated mostly in recent days, the market remains caught between output cuts from some of the world's biggest oil producers and anxiety over demand as Asian nations begin to see a third wave. Alright, and one last one. This won't help economic recovery as energy-related job losses transform from temporary to permanent. So we're now looking at job losses. Supposed to be temporary layoffs because they were expecting a recovery in the market. Now they're looking at these jobs going from temporary to permanent. You're going to start seeing some of these jobs actually become temporary layoffs to now this is going to be permanent. Alright, family? Alright, next one we're going to go to shadowstats.com. That's John Williams' sites. We're going to go with this article right here. The FMO financial markets. FMOC continue to hold its extraordinary low interest rate and extremely high liquidity policies in place. As of June 29th, amidst signs of renewed slowing economic activity, exploding gold and silver prices reflect mounting legitimate inflation fears due to soaring money supply growth, uncontained federal deficit spending, and related weakening of the U.S. dollar. Investors buying gold, looking to preserve their purchasing power of their wealth and assets against the ongoing debasement of the U.S. dollar, will tend to hold their gold. Speculative investors will take some profits at some point. Officially, overt or covert market interventions and jawboning to depress gold prices also will likely unfold. That means they're gonna wait till the price get higher, and then they just all of a sudden they start dumping. They start trying to sell some of their gold, their precious metals, trying to dump it onto the market, taking a profit while driving it low. But once that price hits a certain point, it's a resistance level, and then it's going to go up. Like right now, the new resistance level from some gold bugs and analysts out there, $2,000 an ounce of gold. Once it hits that one and passes it, they are predicting that it's going to shoot to the skies. All right. Yet the speculative profiting and taking officially intervention should prove fleeting, given the serious inflation risk and severe underlying dollar debasement fundamentals. All right, in context of the continuing of the economic turmoil and financial market vulnerabilities, the July FMOC Fed held funds target 0% to 0.25. All right, so that means they're going to try to do the interest rate. We had 0% interest rate. You don't earn anything on any money that you have in the banks now. All right, they're going to try to get that up to 0.25 basis points. All right, with the most aggressive ever liquidity liquidity and money creation policies continued in place. All right. June 2020 money supply. Annual growth surged to record highs. June financially weighed U.S. dollar turned negative year to year. All right. That means the dollar debasement in value has plummeted year to year. All right. All right. The next one. This is coming from a disturbing-ish story coming out of China. Alright, the Chinese have been in the big news as when they issued their favorite nation status in the mid-90s. But China is not immune to what's going on now, family. Even they're starting to telling their people for not buying gold because they know what's going on. Alright, when they tell you don't need to buy gold, it's nothing, nothing. Go buy it. Alright, Ben Bernanke said gold is a relic and you can hold it just to be holding it. It looks pretty. But many people knew that, hey, this man, you call him smart ever in the world, but guess what? Many people looked at him and started laughing at him. And they went and bought gold. Chinese banks bar clients from buying precious metals. In an attempt to avoid another retail-driven momentum melt-up similar to what happened with the Chinese stocks earlier this month, when government media first encouraged Chinese investors to buy stocks only to backtrack days later when local markets soared, sparking fears of another stock bubble on the mainland. Reuters reported that the Chinese regulators and major banks have been rushing to curb precious metal trading as domestic investors temper speculation that they could send prices explosively higher, something we hinted just as last week. Alright, the scramble to limit risk comes as gold prices hit record highs this week, spurred by investors hunting for safe haven assets and markets rattled by worries of rising coronavirus cases, lofty liquidity valuations, and a plunge in the U.S. dollar, which has prompted Goldman to contemplate if the days of the world's reserve currency are numbered. Alright. Alright. Similarly, Agricultural Bank of China said it recently suspended new businesses related to gold, while the Bank of China also said it halted new account openings for platinum and palladium trading. Alright. Meanwhile, the Shanghai Gold Exchange said on Tuesday gold and silver holdings were high and it would take risk control measures if warranted to protect investors. Alright, they don't want the gold. Some people don't want the gold price to go higher. They don't want to deal with it because that means people have legitimate fears of their currency, like here in the U.S. family. Alright, so the trend is on now for these people to say, okay, no more precious metals buying. We're going to protect. Don't buy anymore. They don't want their currency to go down. But it's too late for that one. Alright, and then our final story. Lebanon becomes first country in the Middle East and North Africa to enter into hyperinflation. Alright. Lebanon could face its biggest crisis since the Civil War. Economists are warning. Excuse me. Warning as the country's currency hits new lows. Lebanon is now the first country in the Middle East and North Africa to see its inflation rate exceed 50% or 30 consecutive days. All right, according to Steve H. Hankey, a professor of applied economics at Johns Hopkins University. The sharp rise in the price of goods and services pushes the country further into a crisis. High inflation means many goods have become unaffordable. We've stated receiving messages from educated people emailing us just for help, says Sora Zeder, executive manager of Lebanese food banks. She added, there is no more middle class anymore. Alright, so we see that things are getting bad over there. Pay attention, family, to what's going on overseas, because you're not getting any news over here from these so-called authorized media here in the U.S. Alright, look overseas. This is Lebanon. This is a precursor to what's coming here to the U.S., family. Alright. Alright, once again, thank you for joining me for another edition of Melanin Economic News. Family, please take care of each other, protect each other, look out for each other, alright? It's not too late, family. Alright, get prepared, be prepared, so you don't have to get prepared when it's already too late. Alright, once again, thank you for joining for this edition of Melanin Economic News. Alright, family, let's get it started.